Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we took a look at our big six markets and formulate an attack method for tomorrow's trading. Tomorrow, going to be the 27th of April, rounding out the end of the week now, going into Thursday. Relatively interesting day. Even though we didn't have a lot of news scheduled, it felt like the news wires just couldn't catch a break. There was a lot going on today, and that caused a lot of back and forth movement and just all kinds of fun stuff. So hopefully you played it safe today. But before we jump on into all of the fun stuff here, make sure to swing it over to the website, scroll down, and click on the Join the Daily Outlook newsletter. That's going to sign you up for our email list, so that you will never miss a chance at seeing the newsletter when it comes out. We'll email it to you every single time. Along with that, we talk about different statistics, different stocks that we're keeping an eye on, all kinds of good stuff inside that newsletter. Along with that, at the bottom of the page, we have our daily market psychology video, where we take a look at a specific market, rip it apart from the psychological side of things, and figure out why it did what it did to help us better understand the markets and learn as much as we possibly can. And of course, we have our live trader morning prep levels. Those are posted every morning for the big six as well. All the major levels of support and resistance to keep our eyes on for that day. Now, if you haven't done so already, the live trade room subscription and trial info right here. You can click on that and sign up for a one-day trial to the room and see what we're all about. If you enjoy it, you can sign up for a weekly or monthly option. And of course, if you join as a VIP member, you get that live trade room subscription as part of the entire package, so you don't have to worry about paying anything ever again. Now, looking at the Bund, we have some fairly bullish momentum to the upside. It seems like the buying pressure really just didn't stop. We're finally seeing the buyers kind of prove their case. Over the past couple days, we've been talking about how, we want to see the buyers come in. We're in an area on bigger time frames that makes a lot of sense for the buyers to come in, but they're just not showing up to the party. So with that lack of conviction from the buy side, we just need to wait for the buyers to show up, and it finally looks like they may be taking an attempt at it, right? Big drive lower. They got a lot of distance to cover, but the buyers do have a shot at it. Now, with the buyers rallying higher, we have a nice bull channel grinding up, and that gives us a sentiment to be a buyer, of course, but we need to do it at a slightly better price. Right now, we're pinned to the highs, and we really haven't had much of a pullback. The biggest pullback that we had was earlier this morning around 8:30 or so, and then that was quickly snapped right back up. We had some news coming out here. They took another dip down and snapped up again, and that's the last time we had a halfway decent pullback. There was an okay one right around 1 o'clock, but since then we've gone back to the highs. So what we're looking for is to be a buyer, but preferably on a better price, right around 161.13 down to 12. Even below that may be an option as well to try to jump in on, again, just a slightly better price. Over on the euro, for the most part, we lost a lot of ground today. The sellers really took control, slamming the market lower. Now, if we zoom out, we can see that what happened yesterday on the 25th, that big rally to the upside, they came back, double topped on that prior high of day, the high that was formed over here, and they gave everything back, all the way back down to the lows. So now with that big drop from the highs, we're going into a little bit of a transition phase. We're starting to see a lot more back and forth. We're getting the market with a little bit of buy side, sell side activity, and kind of switching the switching of the guard, if you will. Now, with the most recent low failure and the retest failure as well, shooting higher, we have to give the short-term bias to the buyers because, well, they own the market currently, and they do have upside objectives up at 95.80s. So that is the big area that buyers are going to be looking for over, the overnight session, maybe going into tomorrow morning, as well as monthly resistance at 94.90, weekly resistance at 95.30. We've got a bunch of stuff up here that could act as a magnet for the market to go up. Now, along with that, we do have a slight bear tone, obviously, with this big collapse off the high, so we don't want to get too wrapped up in the buy side. Looking for some selling pressure around that 95.80 would be beautiful, but if we fail to make our way up there, if the buyers can't seem to get through that area, we may be able to find some selling pressure out of that 93.45 up to 9,400 or so to look for some selling pressure down to the lows. And of course, we do have rising support in the way in the form of a channel, but the major objectives to the downside, if that breaks, would be 88.80 down to 88.35. So plenty of downside movement potential, but the buyers may not be done yet, and since they are still holding the market, we got to give them the benefit of the doubt for that upside objective at 95.80. On gold, for the most part, not really much accomplished today. We had a big range today. They expanded a couple times. We had a new high into a new low into a new high. They failed to make a new low, popped into the highs a couple times, and then made a new low, new high, new low, new high. So in this new high, we are getting two legs to that new high, and very frequently that's where the market starts to think about turning around. That's the same thing that happened here. That's the same thing that happened. It's kind of hard to see, but here, a lot of that happens when you get to those extremes where you get a secondary leg test, the second one being a failure, and then we wind out right back into where we started. So the overall range, generally, we have to consider what the trend was going into that range, and the trend going into the range was bearish. The bears owned the market before we went into this range. Well, kind of. I suppose that first candle of the week was kind of ugly and messes things up a little bit. But the bears did own the market yesterday, and that's where we went into the range. So this move higher could be nothing more than just the buyers getting out of the way, the sellers taking their profit at the lows and looking to reload at a better price. And that target area at around 1273.6 looks pretty solid as an area of resistance as well. And that may be where the sellers are looking to re-enter. So even though we are on the bull side right now on this bullish breakout, we don't want to get too tied up in that because the bigger trend is still pointing to the downside. So if we see the sellers show back up to the party, I'll be more than happy to become a seller and follow right along with them. Over on the bonds, another day where not really much has happened. Not much was accomplished, at least. We had a lot of back and forth as there was a decent amount of news, but not really much happened, right? We opened up here, and we had a big move down to a new low, into a new high, new low, new high. They failed to make a new low, so we expect to see two legs up. So that means that we may have one more leg to this towards the upside. And the objective of this, you know, if they really start breaking away from this 27 area or so, I would really like to see them get up to the 153.01.02 roughly, just to see if we can find a nice area of possible resistance to push the market back down. Once again, when the markets are range bound like this, it's always good to have a sentiment, and as we can see here, the sentiment is relatively bearish. There is one big caveat that we run into, though, and that is monthly support. That's that big level at 152.0930.75, cutting across the bottom here. That's where we got hung up yesterday. That's where we got hung up today. We're having a really hard time getting through that monthly support. And the longer that stays there, the more of a difficult time we're going to have. Now, the overall sentiment, it does appear as though we have a slight head and shoulders pattern on our hands. And if we do start breaking down, we could easily be looking for a retest of that neckline, right? The overall breakdown happened over the weekend. That weekend gap down kind of sealed the deal, and sellers really weren't given much of a chance to jump on except for maybe 50%. So it wouldn't really hurt my feelings in the bigger picture to see them go up higher before coming down, but we do have a lot of bearish tone saying that we should go at least a little bit further. The next monthly area of support is going to be down here at 150.31, just below that big 151 mark, and that would be the next area if we do keep breaking down for the sellers to target. Now, again, we do have a slight bull bias right now going into the end of the day. Just got to be careful not to get too wrapped up in it given the range. This is where you're likely to find a lot of sellers begin thinking failure to try to fade it back down to the lows. So with any range, buy low, sell high, stay out of the middle, and right now it's pretty high. Over on crude oil, we had obviously inventories today, which had a big impact, and the inventories, they came out at quite the surprise. Not many people were expecting to see that big of a negative number. It came out at negative 3+ million when they were only forecasting a positive 0.8. So really a big detach from what we were expecting to see from the API, and the inventory expectation today was only forecasting a -1. So we really got hit with a little bit of a surprise move, and that caused a pretty fast slam higher. This is the biggest inventory day that we have had all year. Now, interestingly enough, we talk about this every single time, but there has been 14 inventories so far this year, and of them, 11 have had a counter trend move. So a very high likelihood that the market fails off of that top, and that is exactly what we had once again here, pushing back down. Now, because of that, that ends us up in mostly a range, right? We're having a little bit of a hard time here. There's not much going on. We have the buyers and sellers kind of fighting over what looks to be sort of a spike in channel, spike in wedge down here. And there are a lot of downside objectives. 49.08, 49.01, 96, 94. Big block of objectives below us, which could cause the market to do one of two things. Either we just continue this trend to grind lower, which I really don't want to see, or what we could get is a nice spike in wedge to the downside, a big aggressive massive exhaustive breakout to fill all of those objectives, and then we would turn around and look to be buyers and shove the market right back up from there. Either way, we're in a range, buy low, sell high. We're kind of in the middle, nearing the lows, so we're waiting for the low test. The high side would be 50.09 up to 50.20 if they end up making it back there again for some possible selling. And then finally on the S&P, once again, a situation where not much has happened. A high side range would be at 94.25 up to 94.75. The lows would be at 82.75 down to 82.25, with a couple intermediary levels of support and resistance. Pretty obvious level, kind of cutting across the middle here, 86.25. We found a lot of support there, a lot of resistance there. So chances are, if we can come back to that area, we're probably going to find some sellers attempting to take it down from there. But overall, we've got a big range on our hands, and we are low in the range. The general consensus, we have a bullish move to the upside. We are expecting the buyers to have a more prevalent case here. So because of that, we have a range on today's price action. We're at the lows of the range, and we have an overall pending bull channel. You better believe we're looking to buy around this area, because it makes perfect sense in the bigger picture to find some buying pressure down here at around that 82.25, maybe even a little bit lower, to get a bigger move in the overnight session back up towards those highs. So that's going to be the overall outlook. Not really a whole lot. Lots of ranges, and that a lot was caused by just a bunch of news coming out. Surprise news, nothing that was scheduled, but that threw the markets all over the place. Obviously, crude oil had its scheduled inventories, but tomorrow we've got a decent amount of news as well. At 2:30 tomorrow morning, we have the Bank of Japan press conference. At 7:45, out of the euro side of things, we have a deposit facility rate and the ECB interest rate decisions. The forecast on the interest rate decision is flat. They're forecasting 0%. Previous was also 0%. The deposit facility rate, negative 0.4% is the forecast, same as previous. At 8:30, we have the core durable goods orders month over month for March, forecasted at a positive 0.4. Previous was a positive 0.5. At 8:30, we also have, out of the euro side of things, the ECB press conference, which will have a big impact on the markets. So be very careful going into tomorrow with those press conferences going on. And then at 10 o'clock, we have the pending home sales month over month for March, forecasted at negative 1%. Previous was a positive 5.5%. So quite a drop from last month is what they're forecasting. We'll have to see. But like we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see you all then.